Let me welcome on board our experts. We've got Kunal Bothra joining in, Shibani Sircar Kurian as well on the show right now, and CA Rudramurthy too. But Kunal, what do you make of this ease off that we are seeing from the top? The fact that we were at that 22,750 level, from there it's a good 100 points now and 150 at the session lows.
Yeah, I would call it a bit of a consolidation. Nothing much in terms of trend change, major signals, no major signs emerging from the change in the texture of open interest, the indices, both the Nifty and the Bank Nifty. Yes, the mixture has been a bit off in terms of the market, internals, where you've seen for a change, industries actually showing signs of correction. Then you've seen PSU banks also, the likes of SBI, etc., showing signs of correction. But on the other hand, you've seen ICICI Bank moving up quite, then emerging as a potential breakout candidate the 1115, 1120 mark, which has been a huge resistance zone for the stock price. So I probably keep it this way, that the last 5-6 days we've been making pattern of higher lows and higher highs for the indices. Until the time we continue to do that and respect the previous supports for the index, the assumption is that the trend would continue on the upside.
Let me take it across to CA Rudramurthy as well. Rudra, two stocks, Reliance as well as HDFC Bank, which were the leadership names all through last week and as of yesterday as well. What do you see on the charts there? You think the consolidation is here to stay for some days?
For me, definitely market is now giving that consolidation after a huge 1,000-point move, both on Nifty, which we have seen from levels of around those 21,800, 900 to levels now at around 22,800. And similarly, Bank Nifty has also seen a good move of about 2,500, 3,000 points. Now, this is just a consolidation phase and one has to definitely buy this dip. And specifically, if I have to talk on Reliance, yes, it has strong support and every dips to levels closer to 2,900, and even at current market price, for me, Reliance is a buy. And once it crosses that all-time highs nearer to that levels of around 3,000, 3,020, you will see a big momentum move on Reliance, and I won't be surprised to see that stock moving till 3,200. And similar patterns are seen in HDFC Bank. Yes, it has made a very, very strong bottom formation now at around 1,400, 1,420 levels, and having made that bottom formation, it has given a very swift move to levels closer to 1,550, and currently it is consolidating at this range. So I feel a move towards 1,600 is possible, and then we will see another further leg of up move towards 1,650 level on HDFC Bank. So I am bullish on both Reliance and HDFC Bank. It has to be used as buying opportunity. Use this consolidation to buy stocks which are right, and this up move is yet to stay.
Okay, point taken. So that's the view coming in at the index level. What kind of moves we're witnessing right now? But Shibani Sircar Kurian also with us on the show. Shibani, what do you think of the cool off that we are seeing? Because at one hand you have people talking about how we are likely to see big rally ahead of elections, and then of course the other camp believes the valuations are a bit perky right now, above the 5-year averages, and it will all depend on the direction that we get from the earnings season now.
Hi, good afternoon. So after the great run-up that we have seen in the market over the last year, year and a half, some degree of volatility is to be expected, and that's something that we will have to contend with. However, if you look at, from a market perspective, the ingredients that have driven the rally still remain fairly intact. So the trinity of macro stability in terms of GDP growth, where India remains among the fastest growing large economies of the world over the next 5-year period. Second is corporate earnings delivery has been fairly stable and robust, and the expectation as we go into the quarterly earnings season is that earnings delivery and even consensus earnings estimates remain fairly intact. So that part also is what is driving markets. And the third aspect has been flows, specifically, of course, domestic flows and even the FII participation, which has come back in the month of March. So from the ingredients perspective for the market, those ingredients are pretty much intact. However, obviously we have to keep in mind valuation. Our belief has been that in terms of valuations, reward at this point in time is favorable for large caps, which will be the mid and small caps. If you look at the large caps, the Nifty is trading at about a 5% premium to its historic average multiples, while the mid caps are trading at about 20-21% premium, and small caps are trading at about 20-26% premium to their historic average multiples. So from that perspective, if you look at purely on valuations, near-term risk reward does to be in favor of large caps, and that's been our view, and that's something that we continue to believe.
Okay, that's the take coming in the index and what lies ahead. But let's take a look at the CD ratio or the credit deposit ratio of banks currently, which are at a decadal high, is what our observation has been. In fact, my colleague Asta Chopra joins in with more of an analysis on the trends that she's picking up on this.
Well, the CD ratio of bank increase, which is the credit deposit ratio for the banks, it increased and touched a 10-year high with 38 basis point. It rises to 38 basis points and reaches to 80.3% as of March 2024. The ratio, the CD ratio, which is 80.3%, it includes the merger impact of HDFC and HDFC Bank as well. Talking about the deposits of the bank also expands 13.5% and it reaches to 204.8 lakh crores as of March 2024. Advances of the bank, the credit of the bank also increases by 20.2% and it reaches to 164.3 lakh crore as of March 22, 2024 as well. This issue was raised by the RBI governor also as well on the Friday, and he said that the bank has to clear the correlation between the credit and the deposit growth. This was also said by the RBI governor that the bank should avoid any exuberance and in lending and adopt the measures to maintain the balance between the credit and the deposit so that the growth is substantial and the measure and the difference between credit growth and the deposit growth is maintained.
Thanks, Asta, for that. In the meantime, take a look at the stock of Bharat Electronics. That one is surging away in the trading session. So keep an eye out. Perhaps there's some more wind which is brewing, or perhaps some sort of announcement that Street is expecting, because that stock has managed to work up. And you also have IIFL Finance inching higher. Castrol India too has actually managed to run up 9%. It's not usually a stock which moves with that kind of big, turnaround, but looks like there's a 9% move on Castrol as well. And then you have Motilal Oswal, Anand Rathi Wealth, some of the other names which are doing quite well. Now to slip into a very short break, but don't go anywhere. Lots lined up when we come back.
With closing trades right here in ET now, let's just take stock of what else is looking up in the market. ICICI Bank, that's been holding up very strong. Kunal, I think after a while you're seeing such a big, solid 2% kind of move on ICICI Bank, right? Because of late the leadership clearly had changed hands from ICICI Bank to HDFC Bank.
Exactly. So it's not the percentage move, it's the leadership the stock is showing, devoid of other private sector banks helping the cause for ICICI Bank. So I think that's a standout sign for the stock. And what I also like the charts is that the stock is now ending or coming to an end of a 1.5 hour of consolidation. So it's almost like a 50-60 point of consolidation from 1060-65 levels as a support and 1115, 1120 as a resistance for the stock. And this I think could probably be one of the key factors which probably also propel the Bank Nifty higher. So we've already seen Bank Nifty, the likes of HDFC Bank coming back towards a breakout mode, very close to a 200 moving average breakout. And I think if ICICI also manages to come into this kind of a breakout mode, we could see both HDFC Bank as well as ICICI Bank helping the cause for the Bank Nifty. So I would be bullish on ICICI Bank at current levels, and specifically at a breakout above 11 mark, would look out for at least a 60 pointer target for the stock on the upside.
Okay, so that's a view on ICICI Bank, the sole soldier right now in the trading session with the highest amount of contribution on the upside. But what's putting pressure right now? Reliance Industries. You also have L&T and TCS coming under pressure. Rudramurthy, wanted your sense on the charts of Reliance as well as TCS. If we can discuss a couple of those names, or if would you be able to help us with that, Rudramurthy?
Just now, as I discussed Reliance Industry, I will use this dip as an opportunity to buy. Levels closer to 2,900 offers a good risk reward, and I'll be looking at targets of around 2,980 to 3,000 to come initially. And once it closes above levels of around 3,020, fresh momentum can be seen in Reliance. And if I have to also look at the charts of HDFC Bank, ICICI, Axis, all this, it tells to me that private banks will lead the rally and Bank Nifty is headed towards 50,000. So I am bullish on market and I will use this as a buying opportunity. A quick word on technology as such. I see the consolidation happening in Tech Mahindra, Wipro, and even in TCS as a good opportunity to buy right now. If you see the strong long-term support region, Wipro at around 470, Tech Mahindra at around 1,230, and even TCS at current levels of closer to 3930 is a very, very strong support. So reward is very, very positive. I am very bullish on IT. So the next rally in market will be led by private banks and IT. And in IT, Tech Mahindra, TCS and Wipro will be my top bets.
Let me take a step out of that, what you're saying. Would you concur, Shibani, that the risk reward is quite favorable for IT right now?
So IT is in a pretty interesting spot, if you ask me, especially on the large cap side. Mid cap, one may debate about valuations. If you just take a step back and see what's happened in the sector over the last year and a half, macro instability, high interest rates has meant that there has been significant amount of deferment, especially where discretionary IT spend has concerned, while companies have focused specifically on cost takeout deals. So while deal wins have come through, the discretionary segment in terms of the deal wins have been absent. What we believe going forward, two aspects to it. From a tactical perspective, as and when the rate cut cycle possibly starts and you start seeing some amount of macro stability over the next, say, 12-month period, some of this discretionary spends which were deferred should start to come back. And therefore, that adds to some element of growth over the next 12-18-month period. Structurally, we believe that also the sector is going through a sort of again a transformation. What we saw in the past, where when digital came through or when cloud was adopted, similarly on the AI, a lot of activity is happening. Companies are clearly exploring ways to use AI to improve productivity, and therefore overall processes will likely change again over the next few years or in the medium term. And that also was a structural run for growth where IT is concerned. If you look at the way the sector has behaved, clearly mid caps, given their growth differential and higher growth, have actually outperformed large caps. However, we do believe that from a valuation risk reward perspective, the large caps are fairly well placed at this point in time. And therefore, at this point, from a sectoral perspective, we would be preferring large caps over mid caps. Within the mid cap space in the IT sector, there would be select names where again growth has been strong and is likely to remain strong. And those are the names that we would evaluate in our portfolio.
In fact, Bank of America has also upgraded Nifty now to a buy, and they've upped the target price to 1785 already, making an early case for a calendar 25 demand recovery for Infy. But that said, the hot sector continues to be real estate, be it Godrej Properties or in Adira Realty, or for that matter, Macrotech Developers, which also came by with its Q4 update. It's all been extremely strong. But what is your sense on the charts, Kunal, for any of these real names? Because, I mean, each time the good news is backed by extremely good moves for a sector which is already in a strong bull market.
Yeah, it's into a ferocious kind of a bull market. When we look at this over the last 2 or 3 years, the Anant Raj, they were the first ones to move up higher, and then the likes of Godrej Properties managed to end its, I think 2 or 3 years of correction, by almost a margin of more than 50%, from 2021-22 high till that point when the stock was, I think, at 1,000 or 1,100 points. Now, currently, I would believe that there are few emerging names which are looking quite strong for a breakout. This could be potentially a multi-month, multi-year breakout for many of these real estate names, the likes of Godrej Properties. I think over the last 1 week has shown aggressive kind of momentum. The stock has come back towards a life high for itself, about 2,600 plus mark. So maybe on a slight bit of corrections, say at 2,600 levels, breakout zone, that stock could be considered as a very good buy. Then from the mid-cap end of the real estate pack, I think the likes of Prestige as well as Sobha, they are the ones which are heading back towards a V-shaped recovery. They are also the ones which are looking attractive. Kolte Patil, I think, has crossed back about the 500 mark, and that stock which has done reasonably well over the last 4-5 years. More consistent, and less amount of volatility is what we've seen for the stock. So I think these are the names which I'll be betting on.
Okay, since we're talking about the real estate pack, my colleague Prakash was also picking up some exclusive details as to how the housing sector is something that might be in focus come the new new formation of the government perhaps after the June month, and the first 100-day agenda has already been set. Let's take it across to Prakash to get a sense as to what would be the priority areas of the new government if they do come back to power after the Lok Sabha elections.
Yes, we are expecting some big development under the new government as far as housing sector is concerned. As we are learning from our sources, Housing Ministry has prepared its list of priority the initial days of the new government. Sources are informing that the implementation of Amit Kant committee report on stalled housing projects is likely to be on top of the agenda of the new government. We are given to understand that these recommendations are going to be very crucial in order to resolve stall projects in the housing sector. Therefore, Housing Ministry has set a target in consultation with the Finance Ministry. However, some provisions are implemented by some of the state government, but that is not enough to resolve this issue without implementing full report in a holistic manner. Therefore, Housing Ministry has set a target. If you look at these recommendations, Amitabh Kant Committee has made several recommendations that include classifying stall housing projects under priority financing. Along with that, policy related to minimum internal rate of return is one of them, including providing some one-time relaxation to the home buyers who are stuck in those stall housing projects. Moving ahead, we are also given to understand that the implementation of a new home loan scheme for urban poor is likely to be on top of the agenda of the new government as well, as this scheme has already been announced by the Finance Minister in the interim budget. Therefore, Housing Ministry has set a target to implement this scheme in first initial days of the new government. As you are aware, and we have also been informed by our sources that as per the initial proposal, overall size of the scheme is likely to be rupees 60,000 crore, and home buyers would get benefit of interest subvention in a range of 3 to 6%.
Right. Shibani, your thoughts on the realty sector in a decadal bull run coming out of a decadal low, and it seems the story is not quite done.
Absolutely. So the sector has seen significant structural changes, which has obviously driven some of the moves that we have seen. One clear factor or one clear trend that has emerged is that with the kind of changes that we have seen from a policy perspective, clearly the organized space has gained market share, and that is reflecting in terms of the numbers that you're seeing, specifically where some of the listed players are concerned. And that is something that we believe will continue, at least in the near term. The other debate and the point of debate that is there is, of course, the valuations, given the fact that there has been this sharp run up. The other way to possibly play the sector and the theme of housing is to look at the entire home building space and cement. Cement has been a sector where we have been positive. Cement derives a significant amount of its demand from the real estate space, as the rest of it coming from the infra segment. While in the near term, there is again debate on price. We believe that volume growth should remain strong going forward as well. And therefore, cement is one of the ways that serve as a proxy to the entire real estate space. The other segments to look at will be the building segments. Of course, there is some degree of margin headwind at this point in time, but what we believe is that overall, if you look at home building space, the growth comes with a lag, and therefore, as real estate sales remain strong, with a lag, you should see that play through in terms of volume growth, specifically for the home building segments as well. And therefore, again, a proxy to the real estate space would be the entire home building segment as well, where we continue to remain positive.
Okay, point taken. So that's a view coming in as far as the entire housing sector is concerned. But Shibani, this year it seems like the summer is going to be scorching. We are already seeing the initial signs of it, and the season or the monsoon is expected to be normal, but it will probably start a little later. That's a conversation we had with the SkyMet management, and we have been speaking with the managements of Blue Vijay Sales, etc., who are talking about how the sales of AC and other products have gone up, and we have seen the number come in from Volta as well. Do you think this is a theme that investors should be looking at playing, or this is something which is very difficult to time?
Yeah, so I think, as you rightly pointed out, especially from a summer perspective, there's likely to be a hotter summer. So something that we need to brace for, and that is possibly also showing through in terms of numbers where some of the AC segment is concerned. The consumer durables pack per se has seen significant headwinds where there has been slowdown, specifically because to some extent the slowdown that you've seen on the consumption side where mass consumption is concerned. I think the fact remains that a lot depends on now how the monsoon pans out. If the early signs, as you were rightly mentioning, state that monsoon will be positive or will be normal this year, we would possibly see some improvement where rural income is concerned. And I think that is important to get consumption back on trend. What we believe is that if the Kharif sowing is normal and you start getting a fairly good Kharif output towards the second half of the year, that will help in terms of supporting the rural income. Inflation is under control, and therefore, from a real rural wage perspective, that bodes well. So, this is something that we will watch out for, where the entire consumption story goes. But as you know, we were discussing earlier, mass consumption has clearly been lagging the premium end, and therefore, monsoons play a very important role in getting the rural income trajectory back on track.
Absolutely, and that's exactly what we questioned SkyMet's GP Sharma as well about the prediction for the monsoon, which he believes is going to be normal this year, and also it's going to uplift rural demand. We also spoke with Blue Star about what they're anticipating already for the summer demand. Here are their opinion.
Good monsoon, I will say, most parts of the country. At the start of the monsoon, we expect possibly maybe a little jerky, maybe a little aberrated. Why? Because Allah is still there. It is not vanished. It is still not refusing to collapse. Or keeping that in mind, the ENSO condition, that is the neutral conditions, will slowly, it will gradually and slowly will take place around that time in the month of June. So therefore, the arrival of the monsoon, the onset of the monsoon, the initial thing of maybe a little, not as we normally desire, the monsoon should arrive with a bang. That's what we expect. The summer will go on as usual.
India is the fastest growing market. So today household penetration should be 8% based on a single air conditioner use. But unlike, the washing machine or refrigerator, which will be one per home, ACs can be multiple per home. And therefore, the market is expected to more than double by 2030. And perhaps that landmark year for India, 2047, we should surpass China's market, which is close to around 985 million. Now, India is only 11 million. Okay. And 11 million to 80 million is the growth trajectory that is visible.
Okay. So we are interacting at a time when you have came up with some new products in the room AC segment, and also you're targeting to achieve a 15% of market share by FY25. Can you share some insights on the same? The new
so we are somewhere close to 14% market share, and you know, when you say all India market share, there will be pockets where you will be having 20% share, pockets where it is 15, pockets where we are. So it is a average market share is close to 14.
If you like this video, then like, share and subscribe to ET Now.